This is WPSL Port St. Lucie, New York's.
And now, Princeton Research presents Money Info on WPSL, a weekly feature from PrincetonResearch.com. And here's your host, Mike King.
Good morning, and thank you for the introduction. And we have Charles Moskowitz from Massachusetts and Diane from your state in Florida.
All right. We're all together
Morning.
here.
Where's Greg today?
Well, the Christmas kids have got him pretty busy, and we've got live remote broadcasts daily on location, and he'll be back with us next Tuesday. But well, actually, one more. No, it's next week too. Yeah, we until the middle of December they're doing the Christmas kids. So, but we'll make sure to get you on somehow. And here we are live.
So
Very good.
the market's down just a scant 535 points in the Dow, down about 2.2%. The S&Ps are now down 52, and that's just under 2%, 1.97. And NASDAQ, the weakest of the sisters, is down 165 and looking particularly ugly.
Well, in 2002, we were down 173 points, and that was the worst going back 20 years.
Well, unfortunately, I hate to say this, but it's still early in the day. I'm actually amazed by the amount of carnage here, and what I'm beginning to notice is that just as human nature
Gary Chella?
generally continues, what I'm seeing here are people selling the good ones to hold on to the crappy ones. It's very common, and I think that one of the other things that is hurting the market, and this is just so counterintuitive, some of these big names that are getting pounded day after day, unfortunately, they're still up on the year, which means people still have profits in them. And I think human nature being what it is, I have the feeling that they want to sell things that they can still nail down a profit on. I actually bought the S&P calls, the SPYs, yesterday, and I've suspended the 50% down rule for the morning because the gap to the downside would have taken us out of everything and substantially lower than the 50% down rule. So I'll issue sell orders if it's necessary during the day. But we just keep on moving lower. We're now down 170 in the NASDAQ, 2.43, and the Dow is down 550, or 2.2%. Was that Gary Chella coming on?
The
Yes.
NASDAQ is broken below 7,000. So we're really seeing some dramatic moves to the downside.
How are you, Mr. Chella?
How are you? I wanted to call to say what in the world is going on. I'm seeing a market that's getting hammered. Some of my staple stocks are underwater, and I just thought I'd tune in to hear some very bright people and what their thoughts are.
Very good. Well,
I was just
Diane had some great thoughts.
Diane, good morning.
Good morning.
Diane, I am a fairly large shareholder in GE. I have averaged down. I saw my dividend get decimated, and now I'm asking, in your opinion, is something of that size, hammered down so badly, worth buying more, in your opinion? It's now $7.65 a share.
that would be best for Charles to answer. And I'll speak with you about corporate debt ratios. And that's the real problem that I'm looking at. The corporate debt ratio to GDP is now at 0.45, which when we've reached these levels previously, it was an indicator of recession to come.
Yeah, unfortunately, Gary, the only reason that I would buy GE at this point would be to put into place a buy and write program. Right here, I'm looking at it at 765, and I'm also looking at the December 8.5 calls selling for 31 cents. So from my perspective, the buying the stock at 765 and giving it away at 8.5 and getting 31 cents for it is, a pretty meaningful return, especially since December 21st is pretty much right around the corner. That's a thought there. I think that GE is probably one of the poster childs for exactly what Diane was talking about, which is, incredible amounts of debt. Not only do they have incredible amounts of debt, but they also have dramatically underperforming assets. And, right now that's a shot in the dark. It's tough. It's also tough because traditionally stocks that come out of the Dow, like this one did, tend to rally. We had that when we traded Alcoa right after it came out, and it basically doubled in very short order. And so, we're dealing with that too. It's kind of beginning to look like Jeff Immelt was just there, and a lot of activity doesn't generally have to produce results, and clearly, they did a lot of things that were buys at the high. They went into the oil business 100% below 100% above where we are now. So that's tough. Their GE Power is also tough, and the healthcare portion of it. All of these things have really drawn a lot of attention away from the problem because they all are seemingly fairly good markets to be in, and they're just discarding them all. They're discarding the market in Boeing, too. Boeing has a 30-year backlog that is, really dramatic, and in their business, if somebody has a problem and cancels an order, the next guy down on the list, is happy to be moving up. I'm not sure about what this issue is with the 737 MAXs that may or may not have caused the recent crash in Malaysia. But that's just another bit of extraneous news that on a slow news day, people turn around and look at that.
Yeah. Well, I appreciate your take on it. I'm in it for the long haul, but I thought $10 was the absolute floor. And,
yeah. Well, the whole dividend issue is really important, and the only reason that it still pays a penny a quarter is because they don't want to upset the funds or the ETFs that have the stock in it, but by charter or have to be in dividend-paying stocks. So, as much as it was cut, the only reason it even pays a penny, because they can't really afford it, is for that reason, and that you would see another downdraft. like we're seeing in the market here now, the Dow's down 570, 2.28%. The oil is now down 5%. The S&P is down 55, which is 2.07%. I mean, this is, I hate to say it quite this way, but this is actually, I think, good. These days where we've closed down and then started to the upside the next day don't really flush out all of the selling. And I also think that the key to this market will be what happens at 2 to 3 o'clock, because there are going to be massive margin calls. And, you either put money up or liquidate, after 1 o'clock when all of those are, issued. And if we don't see, if we don't see a little bit of a rally off of that selling, then, tomorrow's another down day. Which is kind of strange because Mike and I were talking over the weekend, and Mike used the Stock Trader's Almanac, and, seasonally, this is actually the best week of the year as far as it relates to, holiday weeks. So, so far we're down 1,000 off the high, meaning this week's high, and it's, carrying over into everything. If there's any good sign, it's the fact that there is liquidation now across the board. The gold, which we're long and has been up, has turned to the downside. So you have stock futures and futures for the products like the oil, like the gold, like the lumber, all moving to the downside, which, again, is somewhat counterintuitive. The only thing that is showing any degree of bounce in it are the treasuries, and they're not particularly impressive either. I mean, we have a 304 10-year yield. We were 324 10 trading days ago. So, that's only a sign of the flight to safety that I've been mentioning in the daily notes and in the Sunday night weekly strategies. Anybody there?
At this point, it seems
Oh, yes.
we've reached levels where what we've gained for 2018 in the Dow has now been taken out. So,
oh yeah,
where do you
all of
feel
them.
we can go from here?
The only thing that's actually up is a stock that I've purchased. I go in and out. It's an index, TVIX. And the short story on that is it goes up when the market goes down most of the time. And that has...
Volatility you're talking about.
Yeah, and that's...
the VIX.
Yeah, exactly. The trading symbol is TVIX. And that's about the only...
Yeah.
I mean, anything else, I'm looking at some really good names that are either great buying opportunities or everybody's just running for the door, and that bubble's about to burst.
Yeah, well, that's what this is really all about. This is the first day that we're seeing volume and strong follow-through liquidation. Again, I'm going to say that while most people don't relate to it that way, what I'm seeing is actually what may be a good sign. I'm not sure that $54 oil is great, but, the thing about the oil that you have to remember is that oil companies are not oil. Oil companies are tethered to the price of oil in kind of an offhanded kind of way. But, you can't trade Exxon or Apache or CVX, Chevron, based on oil. They have assets. They have operations. And, you're talking about an industry that is particularly asset heavy. So, at some point in time, you have to look at, what these companies actually have and separate that from, a dollar up or a dollar down in the price of crude. I mean, it's, that's clearly one of the throwing the baby out with the bathwater issues.
No, I'm not seeing the volume because I'm not where I can see it. So you're saying, Charles, it's a heavy day today?
Yeah, so far.
That
looks like it.
I remember listening to an analyst. He's very well known. I won't mention his name. Morgan Stanley just yesterday, say he was expecting a very light day today. That's why.
The week is a remarkably light week.
But today is a heavy day, from what you're saying.
But today looks, relatively heavy.
Yeah, so maybe this will shake everybody out that wants out. I guess we'll know more, like you said, after 3:00 today.
Yeah, the only thing that I can see that I've seen on the tape that's actually up on the day is Best Buy, who had great numbers, and NVIDIA, which is up $2.50, but is still 50% off its high from 3 months ago. They're stuck with chips that were used for mining Bitcoin. I can't imagine why, and I've been saying this too for a year, I can't imagine why anybody goes into Bitcoin here. They call it, the real bulls on it have stated over and over again that it will be the new store of value as opposed to, gold. I can't imagine, and I've used this quote a couple of times, I can't imagine how you can use store of value and Bitcoin in the same sentence when you see that Bitcoin has fallen 76% since its high at 20,500, and is trading down here. Let me just take a...
I think it's in the $6,000 range.
We hit 5,000 yesterday.
You fell.
I was
going to say you must have slept through it.
I did. I do remember, though, it was right before Thanksgiving. A nice young man, early 20s, very tech sophisticated, not knowing that I used to run a hedge fund and maybe old school, but pretty savvy about the markets, said to me, Gary, you don't want to be in stocks anymore. And I said, no, where do I want to be? I thought he was going to say real estate. He said, you want to be in Bitcoins. Yeah. I said, Bitcoins?
Today's low, Gary, was 41.85.
41.
It had a bounce. 41.
And he was telling me this when it was 17,000. He sent me a text when it got to be 19 and said, I hope you jumped in. I said, no. He said, you'll be sorry.
Right.
I didn't respond back and haven't since to him, but thank goodness I didn't jump in. Holy Moses, that would have been one heck of a mistake.
It's bounced here from that 41.85 all the way back to 4,600. Last is 45.95, and it's down 207 on the day today. So, it's
and
backed by nothing.
What is valuation based on? What do how do they determine that this is a value investment?
I think I have a little information on that. The information, I asked that very same question to that young fellow, and he said to me, we only minted, which I said, what does that mean, minted? He said, well, we only used a mathematical formula that will allow us to make a certain amount of these Bitcoins.
13 billion.
Once people absorb all of them, the rules of supply and demand will take effect. And I said, but you can't hold it. You can't go to a store and trade it. I said, Jesus, real estate stand on.
You can't touch it. You can't use it to purchase stuff. I mean,
but so I'm supposed to invest my retirement money and savings or investment money in something that a group of people I have no idea who they are determine.
Oh, well, they're the Winklevoss twins.
Well, they live in town here in Greenwich, or they used to, and they invested a lot of money in that. But I think it's easy to make money when you were getting it at 10 cents a Bitcoin, or you're the inventor of it, or the one to come out with the new one, and you pick the price. So it's like me saying, okay, Charles, come out with a new Bitcoin, and of course you're going to make money. You'll keep them. 10 million.
Gary, it's like the two guys at the top of the pyramid in a pyramid scheme. They're the ones who are making it. Everybody downstream from that is a loser. Anyway, so that's a particularly tough one. I can't imagine how you put an arbitrary value on it. I heard guys when it was 7,000 and 8,000. Several. There's one guy, I can't remember his name, Brian Kelly, BK, who's on the Fast Money show, and he's been a bull forever. And people would text in or email in a question, and the attitude was, 6,000 should hold because 6,000 is about what it takes between electricity and hardware and software in order to, quote, mine a Bitcoin. So, if 6,000 is the actual cost, the thing is, and excuse me, and Mike and I have a long history in commodities and commodity trading. The fact that they trade these on the CME is kind of a misnomer vis-a-vis, quote, acceptance. The fact is that, you can trade gold, or you can trade soybeans or oil versus stocks. A commodity cannot go to zero in general. But those are product commodities. Those are building stones for things that we need. And so, they theoretically do have a floor under them because there is an intrinsic value in a barrel of oil or in an ounce of gold. When you have something as nebulous as a Bitcoin, again, can't hold it, can't use it. People talk about how hard it would be to use gold to buy things, but the fact of the matter is, if you walked in with, a gold coin, whether it's a Cougaran or the Loonie or the Australian one, at least there's a way of finding out, calculating what that coin is actually worth. When you started to see all of these companies who jumped on the bandwagon talking about the fact that they took Bitcoin in payment, that's not actually true. They did take Bitcoin in payment for things, except that they were taken and immediately liquidated. And so, they had the value. I had a guy who I play racquetball with who asked me about Bitcoin at 7,600. And I said to him, Richie, you're still working. So how would you feel if you finished a job on Friday and you got paid in Bitcoin at $7,000 or $8,000 a coin, and over the weekend, because they trade all the time, 24 hours a day electronically, how would you feel if you woke up Monday morning and instead of that $7,000 Bitcoin, it was $6,500? Not a big move. I said, but how much do you make on your on your actual work that you could lose or mark it down $500 on $6,000. Are you really willing to take that loss for work that you've actually completed? And he said, no, I never really thought about it that way. I said, well, that's the only way to think about it. If it comes under the heading of you have to prepare for the worst. You can hope for the best, but prepare for the worst, because if it goes up, that's great. You absolutely will find something to do with the extra value, as opposed to in your $6,000 example, maybe you had $5,200 worth of materials, time that you paid your workers, and you were happy to take a $500 net gain on it, except that disappeared between Friday night and Monday morning. So, acceptance of Bitcoin was quite a misnomer.
Charles, I don't know if this is true, but I've heard that if you open up an account with one of the exchanges and you lose your password, you're out of luck. There is no
absolutely.
And me, who consistently forgets, my eBay password.
Yeah, right. Me too.
I can just imagine the frustration.
I think that has something to do with being 69.
Oh my God!
I mean, you're younger, but
61 here, but still, just the frustration of thinking, "Oh my goodness, I forgot my password," and I wrote it down and I couldn't locate where I put it.
Or you did your business with an exchange on your laptop, which you lost.
Or the laptop doesn't work anymore.
Right, exactly. Or you replaced it.
That's what I need. That's what I need.
Yeah, no, those are all true. And frankly, the Bitcoin bulls used that as a positive, in that the number of them that get lost is, an issue, because that further erodes the amount of supply.
Great. That's an entity looking after my best interest. I appreciate.
Yeah, right, exactly.
It's terrific.
Yeah.
Well, the market's come back a little bit, Charles. I mean,
down 465.
But it'll really be interesting come that 2 or 3 o'clock time frame. That'll tell a bunch what happens. I mean, I'm sure there's a whole lot of. I mean, especially in my town here, hedge fund capital, at least at one point, it was considered hedge fund capital, Greenwich, Connecticut. I'm sure there's a lot of 40-year-old masters of the universe that are sitting back saying, uh-oh, what do I do now? So it'll be interesting.
And let's also, look at the fact that, we've seen both bull and bear markets. I will posit that at least half, and possibly dramatically more, of today's brokers and RIAs, registered investment advisors, who clear their business through, brokerage firms, they've never seen a rising interest rate environment. They've never seen a bear market. And so, this is kind of funny, because the last time we had a serious bear market, I was sitting and watching these idiots on TV saying, oh, well, you got to buy it. It's down 5% from the high, as if the high has any bearing on valuation. So, what do you say now with the S&P down from 2,900 to 2,650? I mean, do you buy it because it's down? I would say probably not. I mean, it may work out that way, but I would say that using that as a thesis for valuation is fairly dramatically flawed.
Oh, you're 100% right. Charles, I bought my first stock in 1980, and I've never left the market since. I've seen good times, bad times, and every time in between. I've had experts tell me things that proved right, and I've had experts tell me things that prove colossally wrong. And now maybe because of that I'm a bit jaded, but when I go to investment seminars that are local here in town, or speak to people at my country club that I marginally know, that are Harvard and Princeton and et cetera graduates, and they're young. Some of them are 37, 38 years old. And I listen to them.
They have no clue.
They don't. And when I pose the question of the possibility that Apple could go down or that Facebook may not be the way to go, they look at me like, goodness gracious, this old fella has no clue.
Yeah.
And you cannot talk to them because it's almost like you want to discuss climate change. You know, it's like a religion where you cannot possibly be right, and I can't possibly be wrong. So yes,
right.
Facebook will go.
Well,
I actually had someone tell me this. Facebook will go to $275 a share, and that Apple people will buy these phones for $1,000. They'll buy them for $1,200, for $1,500. People will spend whatever it takes, and Apple will only go up. And you just kind of shake your head and say, you know, how long have you been in the market? And they'll go, I've been out 5 years.
Oh, yeah, I've been in
Harvard.
10 years. Yeah.
Been in 5 years. I know what I'm doing. Okay, well, I wish them well. I wish them luck. I hope that they're not going to become one of the horror stories that I've heard about. Through the
you know,
year.
it's funny, especially coming from you, where you are in Connecticut, because one of the things that actually came very close to derailing the market, well, it did derail the market in a major way,
long-term capital
was a group of geniuses who got together and formed long-term capital and could not have had a worse track record had they tried.
Yeah, the premise there, I remember that very clearly. The premise was, we will take the very, very brightest mathematicians, we will form a group, and we will be unstoppable, and we will leverage until the cows come home. We're just going to leverage and leverage because we can't be wrong, because we all graduated from Ivy League schools.
Yeah, here's the problem.
Right.
Here's the problem with that.
That collapsed.
They have, and I actually started writing a book probably 3 or 4 years ago, and I use it every once in a while. I go back to it, and the working title for the book was "No Sense of History." And the fact of the matter is, you know, they now train the firms that still do training. They now train brokers in the methods of gathering assets, because they use outside advisors, and the business is no longer transactional, and so the gathering of the assets is how they pay them. I mean, I work with a guy who has probably $150 million under management. He does not make any investment decisions, and in fact, gets paid 1/4 point on those assets, and that's a comfortable living. But it's not a guy who could roll up his sleeves, do a little homework technically, do a little homework fundamentally, and have a real understanding. There is nothing, and I mean nothing, that is more emotional than, in the business sense, than money. And, sentiment changes, turns on a dime, political, geopolitical, doesn't matter what the impetus is. But, having the attitude of, like you say, they're going to buy iPhones at $1,000 and $1,200, and frankly, they do. I do. Now it's not anymore you're putting your hand in your pocket and doing it. It's the credit side of it, where you have basically a no-interest loan, and you pay Apple or you pay AT&T or you pay Verizon $30 a month, and that's just the cost of doing business, and so what? But it's just so counterintuitive to be able to look at this and just say, well, I can see where it's going higher, and just be, a lemming heading to the cliff. Wile E. Coyote, with the rocket strapped on his back.
Interestingly,
works fine on the way up, but tilt it to the downside, and it gets ugly fast.
The CFO Council survey is now showing that 73% expect the U.S. trade policy to have a negative impact for the next 6 months. And speaking in particular about Apple, you've had a cut in production on the iPhones, and it seems to be a common way of thinking. If 73% of the CFOs are worried about trade policy and the negative impact that can be created for the next 6 months.
And it isn't, Diane, it wasn't like there wasn't any warning for it. I mean, 2 weeks ago, we had the debacle, or actually a week from yesterday, we had the debacle in LITE, Luminance, who makes the laser chip that goes into the new iPhone for facial recognition. And, and it was down 30 or 40%. And then, you had other, this didn't come out of thin air. There have been warning signs. Unfortunately, the warning signs are not legibly written for people who don't understand economics, who don't understand, and frankly, it's the same thing in the retail sector. I know that the iPhones and stuff, some people relate to them as retail, but that's not something I do. When I relate to retail, I think about, Macy's and Nordstrom and et cetera. But when the branded companies, and in my daily note, I keep them separate, retail versus the brands. When you see Ralph Lauren and Under Armour and today's poster child for soft retail, Nike, when you see them go down and go down substantially, you have to say, well, if the manufacturers of the product are not doing well, how's Macy's going to do? How's Nordstrom going to do? How's Kohl's going to do? And, again, if you have any real understanding and if you're not, quote, an asset gatherer, you don't have a clue. And that's really unfortunate. And to a big detriment to people who don't even pretend to understand, the ones who the money managers are doing business for. They don't have a clue. They just wake up and open their statement every month and, either grin and bear it or go out and, buy themselves a new car. The fact of the matter is, the crazies are running the asylum here. And it's tough. Can you imagine being a broker for 3 or 4 or even 10 years and seeing what's going on in this market today and have any point of reference whatsoever as to what it's about? It just doesn't happen. And poor Gary Cho is sitting in probably one of the least in tune states in the country for doing business and living because, again, it makes Massachusetts look good when you look at Connecticut. Anyway.
And then Nevada is probably the best when it comes to taxes.
Well, it is. And Florida. I mean, you had Appaloosa, David Tepper, leave New Jersey and move his business to Florida. And it was such a dramatic move for New Jersey that they came out and explained why taxes were going to have to go up, because without Appaloosa, they were 60 or 70 million in the hole just on the taxes that they're not going to be able to collect.
That's what's happening here in Connecticut.
Yeah.
Hedge funds have, that's why, it's no longer quote-unquote hedge fund capital, whether it ever was, who knows. But people, hedge funds, ultra-wealthy people, even people that have just done well and they've sold their plumbing business and they have a low seven-figure number and between the house value and their business, they're out of here. And,
yeah, and it's the same thing with a lot of the companies.
Oh yeah, companies leave Connecticut all the time. In fact, Connecticut just recently elected a rather progressive group of people, and their answer, it sounds like a joke, but their answer to Connecticut's tax problems are to raise the taxes. So
right.
They're going to, remember, I'm still paying, you mentioned before what the price of oil was. I remember thinking when you said that, wow, I'm still paying $3.40 a gallon for gasoline. Now, granted, that's the 89 octane, not the low end, but
right.
Still, it's $3.40 a gallon. So Connecticut's answer to its fact, to the problem that people that pay taxes are leaving, is that they're raising taxes. They're going to implement tolls.
I was going to say they'll put toll booths back on I-95.
Forces more people to go to Florida and the Carolinas and Nevada. And,
it's pretty much a self-fulfilling prophecy.
Well, that's a fact, that's for sure.
Yeah.
So, Michael, let me ask you, forgive me for interrupting you, Charles, but Michael, is there any particular stock? I mean, I've known Mike now for 15 years, and his insights are always valuable. Is there any particular stock that you think is going to weather well in this storm? In my opinion, the storm.
The quality stocks. Like if you look for a quality stock, like if you look at Procter & Gamble, PG, Coca-Cola, KO, PepsiCo, PEP, Merck, they're doing very well.
Coca-Cola made a new all-time high yesterday.
So they're doing if you look for stocks similar, the quality stocks, they're going to do well, whereas the Facebooks are obviously just sinking dramatically. Mm-hmm. There's no telling how low they can go.
Yeah, and Diane's comment about the the number of companies that are doing incredibly poorly, or the as of yesterday, 40% of the S&P stocks were in bear market territory, which is down in excess of 20%. Defensive. Clorox, as Mike said, the drink companies,
Clorox is doing great.
What is?
Clorox is doing fantastically well.
Yeah.
So let me ask a more provocative question. Would it make sense to look to short Tesla? I mean, I'm a car collector. I follow the industry. I still don't understand why Tesla is $300 and something a share.
But you can buy Leo Motors for 10 cents, and it's the same business.
Well,
it's not. It on the face of it, it is, but really, it's not.
Well,
they
what I was thinking is that
on,
since more of the more established companies like General Motors, Mercedes now is looking to do. Actually, in fact, they were going to do a joint venture on the Mercedes Sprint, the SUV, the big van with Tesla. But Toyota, GM, they're all coming out with affordable and pretty darn good electric vehicles. Just any thoughts on Tesla's viability going forward?
Well, Tesla has a more of a different divisions as companies kind of business. They had a special on Elon Musk. I think it was a week ago Sunday on 60 Minutes, and they show that new Gigafactory and their ability to make batteries for other people who can't, the people who need to buy them. And what I thought was really kind of funny about it, they were in this factory, 5 million square feet, and the moderator said, so what I notice is that you don't really have a lot of employees, human beings, in the factory. He said, "Are you kidding? You just can't see them. There are 4,000 people working here." And so, he has put together, kind of the entire supply chain for manufacturing the car and being involved in space with SpaceX and being in the solar business. You're talking about a guy who is incredibly bright and has seen what he wants to do and is executing on it. It's an amazing story, and because he has such a multi-pronged business, more people think that this is okay. And in fact, Tesla yesterday sold off pretty much. It was up all day, $5, $6, $7. It finished down, $1.05 or something, and it's down $7 today. But it's at the high of the day, or as close to the high of the day, at 346 and change, with a low of 333, and is a meaningful bounce. Is he is he Orson Welles? Maybe. But he is well respected, and he has made great strides in multiple businesses. He's also got that boring company that is working on the Hyperloop, and that's a hard one. And the fact of the matter is, when things were tough for him, when he made mistakes, and the Joe Rogan interview was clearly a mistake, they punished the stock. But from the standpoint of it's kind of interesting, Gary, that I heard the same story about Amazon and its competition. And when Amazon was 50 and 100 and 150, there were people saying, this company has so much potential. But the problem will become when they start to realize that potential and they have an apples-to-apples comparison with other companies in their field, then at that point, they'll be tied to their profits and tied to, their market multiple. And, so it took 1,000 points in order for that to come into, being one of the points on how you value it. It's tough. I hear this guy, Bob Lutz, who was the chairman of General Motors, talking about, if they valued it as an automobile company, then, like General Motors, then it would sell for, a divisible fraction of where it is now. That's just not true.
Well, I don't know. I do know a little bit about Bob Lutz. The guy is a living legend as far as General Motors goes. I know only hearsay stories about Leon Musk, whatever his name is. My neighbor went to high school with him in Canada.
Uh-huh.
He was bright in high school, too. He was a visionary in high school. In my opinion, though, we'll see $300 a share way faster than we see $400 a share with that stock. Because
well, and you
come out,
clearly may be right. But, the other thing is, how important is an electric car if the price of oil goes back to $45 a barrel and your $3.40 gas is all of a sudden $2.60?
Well, if I'm living in Connecticut, I'll never see that, so I'd have an electric car. The
other thing
gas
that's
could be
interesting
free,
is,
and Connecticut would still charge. Do you know Connecticut has the highest sales tax on gasoline than any state in the? That's why it's so expensive.
Yeah, but when they did all of the rebuilds on the I-95 corridor rest stops, every single one of them has Tesla charging stations.
They sure do. They sure do.
Anyway, we're getting close to the end here. I just want to give an update. The market's only down 348 right now in the Dow, so it's about $200 off the lows. The S&P is, down now about half of what it was before. The NASDAQ is down 44, and I'm seeing on the tape, I'm seeing stocks like you mentioned eBay. I'm seeing NVIDIA. I'm seeing a lot of these, high-tech deals coming back and turning green. The S&P was down 50. It's now down 24.11. So that's a pretty nice comeback. Today could be the day that we do bounce because it's the first day that we've had any follow-through to the downside. And again, we'll wait until later in the day and see how the margin shakes out. Good work.
Have a nice Thanksgiving, everybody.
And thanks, Diane.
You're welcome. Happy Thanksgiving, everyone.
All righty. Mike King and Charles Moskowitz. Yet another episode of Money Info in the books. Sign up for that newsletter at PrincetonResearch.com. You're listening to WPSL Port St. Lucie, celebrating 25 years and counting.